Hello, everybody. Welcome to our latest edition of the Philip Steiner Associates podcast. And today I'm going to be co hosting with someone who's been with the firm many years, but never been on a podcast. So, Darren Eliasov, welcome, first of all. This is your maiden podcast. And before we get started, why don't you let our listeners, our viewers know a little about you and your how you got to the firm and a little of your background?
Thank you, Philip. So I am a senior manager in the individual department. I've been at the firm now for over 11 years. I'm mainly working on the individual and partnership department. And yeah, I've been running the department for the last 3 or 4 years now with the help of Yakov and Michelle. So yeah, and I'm happy to be here.
All right, so it's good to have you aboard, and obviously, from your accent, you're not an American, but you are a U.S. tax accountant, which is unique. But I'll ask you a couple. I want to before we get into the subject, which we're going to be talking about charity tzedakah today. Do you know anything about golf, Darren?
Me, I'm not a golfer, but in South Africa, it was a very big thing. You were forced to at least do a little bit of play golf, especially when I was doing my articles in South Africa. That's the stage in Israel. You were kind of forced to do golf because that's what everyone did on a Sunday or during actually some of the client meetings would happen on the golf course, and you actually had to play of it. But it was
So
definitely not.
I won't ask you. I won't ask what your handicap is, but there was probably one of the greatest golfers of all time, Gary Player. I don't know if you ever heard of him. He's about 90 years old now, but he was a champion. But I want to speak about a different golfer who you probably never heard of. His name was Roberto Di Vincenzo. Okay, and he played probably the iconic golf tournament in the United States every year is the Masters, which is played usually in April or late March. It's in the same course, Augusta National in Georgia. And in 1968, I was a young man, young boy, and I was watching the tournament. And he got to the end, the 18th hole of the fourth day, and he won. He had the lowest score. And at the Masters tournament, the winner gets to put on a green sport jacket. That is the trophy. You get a trophy too, but it's the big thing to get one of these green jackets. And he puts on the green jacket, and then there's some commotion and it turns out that his scorecard and the way it worked back then, I don't know if they still do, the person you're playing with, he keeps your score and you keep his score. And at the end of the round, he hands you the card to review and then you sign it and you submit it. So the person he was playing with put in his score, but he made a mistake. On one of the holes, he put one number too high. He had birdied and he put it in as a par. And after he had the green jacket, the judges checked and saw that his score was 1 point higher than it really was. And he lost the tournament. He had to take off the green jacket and give it to someone else because of an error. Okay. Just paper error. So I think you know what I'm getting to here. Okay. And
Yeah.
he never
Wow.
became a champion of the Masters. But what we're going to open today is about two cousins who gave a piece of land, gave it away. It made a real, true charitable contribution, put on their tax returns a deduction for the value of that thing, filled out the right forms, but they forgot one thing. So, Darren, you want to tell us what the Martin cousins forgot to do and then what happened?
Yeah, so let's just start with how it worked. So they had this land. They even got a proper appraisal of the land. Then the appraisal value was $665,000. So we're not talking about some small little form or anything. And the IRS landed up disallowing this whole deduction. Why? Because you have to have this written acknowledgement. It's called the contemporaneous written acknowledgement of the gift. And this is under IRC section 170. And because they didn't have this letter, the goods or services were, even though they were provided as a charity, it was completely disallowed for tax purposes.
So they gave the land. The recipient acknowledged it. I think it was a municipality, a town or something, right?
Yeah,
They
it was
they
the it
filled
was
out
the
they
municipality.
filled out the right tax forms, right? But this document, which I think laymen call a receipt, right? They just never got it, right? They never got a receipt.
Exactly. And with the rules, how basically the IRS have created these rules that very often in the IRS regs, it'll come out saying that you've got to be the Congress or someone can actually say what information you're required to give in. And with this, though, it was actually written into the regs exactly what you're needed. And because it was normally, if the Congress can just decide what you need, as long as you got substantially most of the information, you can still claim the deduction or the depreciation or whatever the situation is. Now, with the charity, because it was actually put into the regs, there's actually no wiggle room. So even if you've gotten the substantial information, they've given you an 82, 83, they've given you all the other information, it still is not going to help if you do not have the written acknowledgement, this receipt.
So that's why I brought up that story about Roberto Di Vincendo. He did everything. He won. He did what he was supposed to, but he didn't. The card was filled out wrong, and here just because of the receipt. So one, what should clients or people listening to want to know, at least for U.S. tax purposes, because we're going to talk in a minute how Israel is actually going in the other direction, but how important it is for people, whether it be cash contributions. In other words, someone might say, "But I've got the canceled check, right? I know I made the contribution. I gave the institution the money." That they didn't get a receipt. So how important is it in light of this unfortunate court case to have a receipt in hand?
Okay, so the important point is that it's only for amounts over $250. So if
Okay.
you're giving 10 or $15 to different charities every month, it's not as important to be getting these receipts as if it's a contribution of over $250. And the timing is just as important as the receipt itself. Because if the receipt is, if you've gotten the receipt, but you ask for the receipt later on, it is actually too late. You need to be getting the receipt before the date of filing of your return, including extensions, or the actual due date of the tax return. So you really have to make sure that you get that receipt on time before you go into your tax preparer to prepare the returns. You need to make sure those receipts are in hand. And if you don't have the receipts, wait, file the extension to October 15th in order to ensure that these receipts are correct and you've received them.
Okay, so that is a very important tip. Now, I'll jump to a related subject for our clients here in Israel, and then we'll get into another subject about the interplay between the contributions in Israel. If you live in Israel or you live in the States, you want to contribute to a charity in Israel. But Israel, for many years, they were so careful that you could not take a deduction, or in Israel, as you know, you get a credit, a tax credit, unless you had the physical receipt. You couldn't send in a photocopy. You couldn't send an email of it. You had to have this physical receipt with at the bottom it says according to Article 46. And last year Israel actually made a change and said, "You know what? You don't need it anymore because the charities, the minute you give that receipt which they issue to you, it's going into the Israel Tax Authority computer. So they already have it on hand. The charities now are obligated, assuming they comply with the rules, to actually inform the ITA immediately. So it's actually when you do your Israeli tax return now, those contributions are already in it. So someone might get lazy saying, well, I don't need them for Israel anymore, right? But you still need them for the US based on what you said. So I think that's just something I wanted our listeners to be aware of. Now, Darren, the next thing I want to talk about is this, what I call interplay, where people either in Israel want to give to a US charity or people in the US want to give to an Israeli charity. Normally you'd say, well, you can only give to charities that are in the country you live in, but the treaty does have a carve out for this, and maybe we could just talk about that people when they make this decision, who should I give the money to? Should I give it to the Israeli branch of the American institution or should I give it directly? So let's talk about that a little.
Yeah. I mean, it's interesting to know, Philip, that there actually only in the US, there are only two other tax treaties that have this provision, which is Canada and Mexico.
Hmm,
And in Israel, I don't believe Israel's got any other tax treaties with other countries that have actually got this provision in. So it is
that's
definitely
interesting.
very unique to the
Fascinating.
US and
Okay.
Israel.
Well, I think we both know Israel's a very charitable culture. Okay, there's a lot. I think there's more non-for-profits per capita in Israel than anywhere in the world. But the U.S. always has had that tradition too. And of course, the U.S. and both Israel realized that you can incentivize people to give charity because you give them a tax break. In the U.S., it's a deduction. In Israel, it's a tax credit. But again, let's say a client, someone calls you and says, Darren, where should I give it? I want to give $1,000. I'm living here. I'll even make it more narrow. But all my income is from here. But they'd prefer me giving it the check to the U.S. friends of. What would you say to them?
So the charity provision in the treaty is actually very specific because you only can take US charity against US source income and and therefore and it's actually capped for an Israeli person living in Israel, even if they're a dual US Israeli citizen, it's capped to 25% of their Israeli income for Israeli charities. And for US charities, of course, you can always just get the deduction. So in a situation where someone's only got Israeli sourced income, it's preferable just to be giving it straight to Israeli charities. Whereas someone living in Israel who's got US sourced income, there it's a bit more easier on the US side. It doesn't make much of a difference. But on the Israeli side, it actually does make a difference because you'll be limited as well to the treaty. So yeah, so I would be saying in the case where you've got Israeli income, you need to be giving Israeli charity. If you've got US income, you should rather be giving to US charities.
Okay, very, very, very good. Let me switch now a little direction. You and again, if going back, we talked about the Martin versus Commissioner, but in general, if you have a client who wants to give, let's say, an entrepreneur or one of our high tech clients who had a startup and they're about to have an exit, can they give that stock? Can they give that stock to a charity before they sell it, or do they have to sell their stock first and then give the cash to the charity?
Yeah, you can definitely give the actual stock to the charity, and it's actually new rules in Israel as well that you can get the deduction as well. The advantage, of course, is never mind that you're giving appreciated stock. The gift of that stock is going to be the fair market value of the shares that you're giving, and you also don't record the capital gain. So it's really a double benefit that you will be receiving by giving the shares instead of the cash.
First of all, I think it's a great strategy. So anyone, people out there, but you could also give, even if you're not a high tech entrepreneur and you own 100 shares of Nvidia and you have a huge capital gain on that, or some other very popular like Amazon or something like that. You're saying you could take that stock or tell the broker, give it directly to the charity, right? You don't pay the capital gains tax and you get a full deduction or credit on the
Yeah.
value. Okay. So I think that's
Exactly. In
very,
those situations, you do have to be careful of the provision of up to 25% of your Israeli income for the US return, because very often, if you're giving a large value of shares, it can end up being more than that 25% of Israeli sourced income. So you do have to be a bit careful and make sure that you do speak to your Israeli CPA and your US and your Israeli CPA before making those decisions.
yes, that's a very good point because we have seen people, particularly those who are fortunate to be in an exit or one of the founders, that they really need to give that contribution in the year of their exit, okay, because of that 25% limit, because otherwise the following year they may not have that much income. Although there are carryover provisions, you can't carry charitable, but you really want to do it contemporaneously. And I've seen this over many years. People who suddenly have an exit or a financial windfall, they're not used to giving these sums of charity, and they're not familiar with, you know, non for profit. And they have to really learn. And rather than being under pressure to give that money immediately to some institution, the U.S. has had it for years. Israel recently allowed it, called donor advisory funds. Okay, where you can take that stock or that piece of land or that appreciated property and put it into a fund where you get a full deduction, which Israel now recognizes as well. There are several here that exist in Israel. And then you're not under pressure to immediately give those monies to a charity. You only have to give like 5% of the fund away. So So we're big advocates of they're called DAFs, donor advisory funds, and you can give regular cash, you can give appreciated property, also land, and I believe they even take the ones in Israel, carried interests. They will allow
Yep.
that so that's very important to know. Okay, so one other topic that I wanted to talk to you about today was the ability of some of our clients, retirees who have to start taking money out of their IRA or 401k. When they take the money out, they have to pay tax, but there's maybe a way they can take money out and not pay tax and also help a charity of their choice. Could we speak about that a little?
Yeah, so we're talking about here the qualified charitable distributions where you take your normally once you're hitting the age that you got your RMDs to take from your IRAs, you can actually give them directly to charities. Now, what is important is that it has to go straight from the IRA to the charity. It cannot go to your bank account first. And you can have that transfer up to $108,000 in the year.
And today, just since I brought up the subject, RMDs now is what, from the age 72, I think, is that when you have to start taking that out?
70 and a half. Is it 72 or 70 and a half?
I think they knocked it up. Okay, we can check that. And also, having mentioned before, DAFs, though, you can't put your that that you can't put it into your DAF. You have to really have to give it to a independent qualified institution. Other than that, Darren, anything else you're seeing in the world of charity and here in Israel in terms of how people are contributing these days?
No, I mean, that is really the main way. We're seeing a lot more of the DAFs. I mean, on that, there is an important point with the DAF is that most people feel, oh, this is my money. I'm going to decide where it goes. Once the money goes into the DAF, you should realize that the DAF really, the fund itself has the choice where to send that money. They normally are going to ask you for your opinion, but if the DAF decides, well, we don't like where you want to be giving your money, they can give it to other places, and you don't actually have recourse on that because you're giving it to the DAF. It's their money and you've taken the charity contribution already as a deduction on your return. So that was the important point of the DAF. Otherwise, I mean, as long as you're giving your charity, you're in a good position. Make sure you get in your receipts, which is the important part as we've been discussing. And then the other thing as well is that if you are giving shares to a DAF, you got to make sure you get a proper valuation done by a proper appraiser so that you can get the deduction as well, because that can get, you can end up also losing out on the deduction if you don't have that paperwork either.
Right, and certainly that applies, as in the Martin case, to land. Okay, if you're giving some real estate
Yeah.
or some art or something like that, those are all things that one can give. But as you pointed out, there are limitations. Yeah, I think it's something that we in Israel deal with a lot. I think people at all income levels do give. We tend to see give charity, okay, give tzedakah, but I think in the higher ends, we see it becoming, because of the donor advisory funds and because of the world of high tech, we see it more often. I think one other thing I would add, although for most people it's not relevant anymore, because the exemption for estate taxes become so high that if someone decides to, as part of their will, decides to give charity, not during their life, but at their death, those are sums that reduce their taxable estate. Okay, so if someone maybe is over the exemption amount, isn't comfortable with giving up their money while they're alive, but also doesn't want to burden their heirs with estate tax, they can put in their will that upon my death, a certain amount of money will go to charity to reduce the taxable estate. And that's something we've also always continued to advise. So thanks for being on your first podcast, Darren,
Yeah. It was a
and
pleasure to be.
telling us about that you actually did play golf once upon a time, and maybe someday you'll take it up again. Okay, we do. The firm does participate once a year in the Ezra Mitzion. I'll give a plug for them golf outing. It's something we sponsor every year, and it's really a fun event. And
Yeah.
thank you so much
Uh,
for participating in this. And
Thank you very much.
if anyone has any questions for you, what's your email, Darren?
It's Darren, like my name, at pstein.com.
Okay. Thank you again, and be well.
Okay, thank you very much.